Investing in shopping centers. Shopping centers are a good real estate investment, especially if you are in the market for a steady cash flow or diversification from the stock market. Real estate investments typically yield regular rent payments that can be used as profits or to reduce debt. Shopping centers are valued based on their net operating income that they produce, and therefore they tend to go up in value independently of the stock market. Most retail leases include built-in rent increases, therefore permitting the owner to gain even as the market is depressed. The value is determined based on a capitalization rate on the current net operating income. So every time the rent increases more than the expenses, the value goes up. The market has been improving significantly in the past 12 months thanks to strong buyer competition, low supply of quality assets, and declining vacancies. These fundamentals cause a cap rate compression, which increases the value further. Ways to invest in shopping centers. Purchase shares of a real estate investment trust, a REIT. A REIT is publicly traded stock in a company who owns real estate properties. A REIT is to real estate as a mutual fund is to the stock market. Some REITs focus on the management of shopping centers. Number 2. Make investments in still more specialized REITs when you locate a niche that is going to take off. Number 3. Count on a mutual fund manager with your funds if you are not up to date on real estate developments. Number 4. Go in with a syndicate of real estate investors. A syndicate is similar to a REIT, even though it is on a lesser scale and organized another way. Syndicates more often than not have higher minimum investments, so they aren't intended for everybody. Number 5. Buy a shopping center yourself. Investing on your own demands a major capital expense plus cash reserves to disperse for repairs and management expenditures. When you hold the funds and access to good guidance, direct investments have the potential to yield excellent revenue in addition to depreciation tax benefits. A steady double-digit return on equity is not abnormal, but keep in mind, just like any other, this investment vehicle requires knowledge and expertise. Many factors need to be considered when analyzing a potential investment, such as size, anchored versus unanchored center, credit rating of the tenants, store sales versus costs of occupancy, replacement costs, staple versus discretionary tenant base, upside potential versus stable income stream, and much, much more. Always consult with a true retail expert before investing. Grocery-anchored shopping centers work better and are less risky than retail investments. This is primarily predicated on 3 notions. Number 1, grocery stores are exceptional in their ability to appeal to shoppers on a consistent basis, regularly 2 to 3 times a week. This supplies a grocery-anchored shopping center with steady traffic that benefits the inline tenants. Number 2, grocery stores characterize a non-cyclical business. People have to eat no matter if the economy is strong or weak. So grocery-anchored shopping centers can depend on a minimum level of traffic regardless of economic setting. Number 3, lots of merchants have experienced considerable sales loss to the web. This has in recent times led to the concept of exchanging big stores with smaller showrooms. However, the internet has not affected the grocery store business as much. While a number of grocers have attempted to put into operation online stores, the model has been hard to employ and unsuccessful. As a result, a lot of investors view grocery-anchored shopping centers as a hedge to the threat of online shopping confronted by other merchants. These 3 traits actually led numerous principal investors to allocate investment to grocery-anchored shopping centers given that they are viewed as secure and low-risk investment relative to other real estate options. You should evaluate the performance of grocery-anchored shopping centers comparative to other real estate investments, primarily in provisos of asset prices and capitalization rates. Investors pay more for grocery-anchored shopping centers, and a possible cost premium is warranted founded on actual performance. Measuring the unpredictability of grocery-anchored shopping center prices in comparison to other retail and non-retail investments will help determine the comparative risk of your investment.